Hello, I wanted to do a video to try and explain the closing costs on a refinance and how you can structure your new loan amount to include the closing costs or not. So when you look at a loan estimate, also called a good faith estimate, you'll see there are hard costs that are needed to put the new loan into effect. Application fees to the lender, appraisal fees, title insurance. And then you've got some fees to possibly, depending on your jurisdiction, the state and county for transfer taxes. And then you get into prepaids and escrows, which are not necessarily closing costs, although they are monies that you see at closing, but they're not hard costs that are paid to affect the new loan. These are monies that you would pay anyway. You pay per diem interest anyway on your current loan. You pay taxes and insurance on your current loan. So when you look at the total breakdown, you see that all of the costs together, they list as total closing costs, which is semantically not totally correct because they're not all closing costs to affect the new loan. But you'll see $8,515 at settlement, which really is partly closing costs to the lender and the appraiser and the title company. And then there are escrows to establish the new escrow account for property taxes and homeowners insurance. And then there's a little bit of per diem interest, which will fluctuate depending on what time of the month that we go to settlement. These three things together total that $8,515. So what most people would do is they would finance the closing costs, the actual lender, title, appraiser costs, the hard cost, into their new loan amount. So if you owe $500,000, for example, maybe you would take out a new loan for $504,000 or $503,600. And then you would pay cash for the escrows and the interest. Maybe you would show up at the settlement table with $4,800 to $4,900 to cover these two things, knowing that you're going to get a refund back from your existing lender for the existing escrow account, which should be very similar in dollar amount to what the new lender is going to take here. So if you go to settlement and you've got to write a check for $4,800, you may be getting a refund of $3,000 from the current lender. Now that refund check may take 3 or 4 weeks, FYI. And you're also not going to make a payment on the first of the month after settlement. If you settle, let's say, March 16th, you're not going to make an April 1st mortgage payment. You wouldn't make a new payment until May 1st. So you skip that April 1st payment because you've effectively paid it at the settlement table. Where is that prepaid interest? By paying some per diem interest, and that skipped mortgage payment, and then the refund from the lender getting paid off will offset the amount of cash you bring to the settlement table, and then you've financed in the hard cost or the closing cost into the new loan. Now, depending on the appraisal and some other variables, you could potentially finance in every penny of this. Most people don't because it really doesn't make sense to pay interest on a 30-year loan on, a partial property tax bill or 2 weeks of per diem interest. It really doesn't make fiscal sense. So most people would finance the hard cost or the closing cost, pay cash for the escrows and interest, and that's the way they would structure their new loan amount. Some people might want to pay cash for all of it. And if you owe $500,000, rather than inflating your loan amount to 503 or 504, they may just keep the loan amount at 500,000 and pay all of this at settlement. The bottom line is you have options on how to construct your new loan amount. We should talk about this at loan application and again when the appraisal comes in, because the appraisal amount and the loan to value are also going to have some input into how we are able to construct the new loan amount. But hopefully this gives you some good input on how the loan amount is constructed, what the costs are, and the fact that the closing costs on this particular loan are not $8,515. It's more like half of it, almost $4,000 is closing costs. Half of it a little over 4,000 is escrows and interest. So we'll talk soon, and feel free to ask questions on how to construct your refinance loan amount. Thanks for watching.